You want to take one? Go for it. The first one's for you. IMF. Do you see IMF holding crypto assets in the future? I did not put that up there.
Remember, I'm from the legal department. I'm supposed to be very conservative about these things. I don't want to go into great details about
Maybe
the
I
IMF.
should take what the IMF is going to do. I think we stunned Ross into silence with that one.
For that to happen, okay, under the current legal framework, some country would have to use a crypto asset as its currency.
Hey, what's going on, bull runners? Welcome back to the channel. Today is a big one. I've got something brewing for you that's going to make you sit up straight. Picture this: the crypto market shifting under your feet, XRP holders are buzzing, Bitcoin's dipping, and some huge moves in Washington could change everything. But here's the thing. What if I told you there's a hidden thread tying all of this together? Something most people aren't seeing yet. Something that could mean opportunity or chaos, depending on how you play it. Stick with me for the next few minutes because I'm going to be breaking it all down. The news that you need to know, why it's hitting now, and what it means for your wallet. We've got Coinbase dropping a bombshell for XRP fam. Treasury yields are sliding to 4% while the dollar softens. Hello, Bitcoin dip. And Trump's SEC pick just cleared a major hurdle. Plus, lawmakers pushing hard against digital dollars. By the end, you'll know exactly what's at stake. And here's the kicker. Stick with me till the end, and I'm going to give you an exclusive sneak peek at Altcoin Pro University, our thriving crypto community. Trust me, you don't want to miss this. And if you're like most people where you don't have the opportunity to spend hours a day in the crypto news like we do and bring that to you in a condensed manner on this channel, subscribe today. And if you're feeling bullish about this current bull run, let me know by commenting 777 down below. Plus, we'll be jumping over to X to find out all the breaking news that's happening in the financial world today. We'll look at the red folder news for the financial calendar that's happening this week. We will also be jumping into the XRP charts at the end of the video, looking for the next support and resistance levels that's important to you. We'll also be checking on the short-term and long-term momentum waves for XRP. And we have the news headlines we'll be covering. But first and foremost, let's check out the overall health of the crypto market today over at CoinMarketCap. We're currently sitting at a $2.66 trillion total market cap for crypto. It is up 0.31% today. Today's trading volume coming in at 95 billion. We'll check the 1-year chart here. Remember, what we're really looking for crypto to do is have a bottom here. This would be a nice bottom right here if we could start to make the move to the upside. Break back above $3 trillion, indicating positive market structure for the total crypto market. As of right now, we do have that low as of March 10th, the potential bottom at 2.5 trillion. And if after the disaster and the craziness that's been coming out in the financial markets over this week so far, we could consider a bottom at 2.66 trillion, nothing but great news could be happening for us to the upside. Conversely, if we continue to melt down and we break down below this $2.5 trillion low, we could continue on our way down closer to 2.25, even potentially to these lows here at $2 trillion. Fear and greed index coming in at 24 today. We had a recent high on the fear and greed index on March 24th, ticking up at that 34 level. Last week on average 33. Yesterday was a 29. We are heading back towards that extreme fear level. Altcoin season index getting lower. Yesterday was a 16, ended with a 14. Right now, today we're sitting at 14. Last week was an 18. Basically been trading sideways here at about 15 on average. So it is Bitcoin season for the moment. And Bitcoin dominance coming in at 61.9%, up 1.56%. And in the midst of all the craziness, all the turmoil that was going on with the tariffs yesterday, Bitcoin ETFs had a huge day to the upside. $218 million inflows to the Bitcoin ETFs. As we've been tracking with the Bitcoin ETF tracker 2 weeks ago, we did end up in the positive side at 627 million to the upside. Last week up 196 million. And we would love to have a positive inflow to Bitcoin 3 weeks in a row would be positive. Top 5 trending coins on CoinMarketCap today. Number 1, XRP. Number 2, Solana. Number 3, Pi. Number 4, BNB. And number 5, Trump coin. And we have had a shakeup in the top 5 cryptos by total market cap. Number 1 coming in obviously at Bitcoin, $1.6 trillion. Ethereum at number 2, 219 billion. Tether at number 3 at 144, but it is a stable coin, so we'll skip that one. Number 4, XRP at 120 billion. Number 5, BNB at 84 billion. But the flip that just happened is USDC stablecoin has now taken over the market cap of Solana. Solana was number 6. Now it is number 7, both trading in that $60 billion range.
We just launched Altcoin Pro University, where our research team gives you real-time altcoin picks with explosive potential for this bull run, along with 100+ expert curated classes crafted by industry experts to discover these gems yourself, on top of our live weekly calls every single week for in-depth crypto market analysis and daily updates. And that's just a fraction of what we offer inside of Altcoin Pro University. Just go through the link in the description below, get in right now, watch the 26-minute video covering everything that Altcoin Pro University offers.
Heading over to X to find out all the breaking news today for you. First and foremost, right here, new and odd filing just now in the SEC versus Ripple docket, an emergency request to present decisive evidence in favor of the defendants and in favor of liberty for the American people. The letter from a man named Justin Keener doesn't make clear what the so-called decisive evidence is or how it would benefit Ripple, but hints it is something to do with the physical investment contracts he's been collecting. Looking further into Keener, though, it looks like SEC recently sued him for being an unregistered penny stock dealer, for which a court has ordered him to pay over $10 million. But is this positive news? Could he have some sort of special smoking gun that could help the Ripple team? We will continue to keep you updated on this as it evolves. And we'll talk about this a little bit more in the details of one of the articles we're covering today, but we're excited to announce Coinbase Institutional. The Coinbase derivatives have filed with the CFTC to self-certify XRP futures, bringing a regulated, capital-efficient way to gain exposure to one of the most liquid digital assets. We anticipate contracts going live on April 21st, 2025. Stay tuned. So that means this month, less than 3 weeks away, we are going to have futures contracts for XRP on Coinbase Institutional Trading. Just in, the U.S. stock market records its worst day in 4 years. Also, just in, SEC acknowledges filing for Fidelity's spot Solana ETF. So what's really interesting is, yes, we are having some major shock going on in the markets because of the tariffs. The uncertainty at first was making everything go up and down, not sure. Tariffs hit us, instant, essentially a nuclear bomb went off on the financial markets, but the bottom could be in. So we're going to continue following that. Once everyone starts to understand how these tariffs are going to actually impact the financial stability of the United States, the financial stability of companies all around the world, we'll get back to business as normal. Right now, some people are saying that they are just trying to punish Trump because, remember, a lot of these major corporations do business all around the world. They have offices and manufacturing plants all around the world. So they're also very, very upset. The people that have billions of dollars, the BlackRocks, the Citadels, they're selling off shares because they want to bring the market down. And as we saw in the kickoff of the video, the famous video of Brad asking the IMF if they will hold XRP, the reaction says it all. The grand plan is happening behind the door. And one of the coolest things that I found scrolling on X so far, go follow Layer GG Official at Layer GG Official. They have a crypto calendar. So 2025 crypto calendar for April. Today being April 3rd, you may be watching this on April 4th, but take a look at this. Thursday, April 3rd, U.S. initial jobless claims come out. We're going to be hitting on that here in just a moment. Coinbase International FAI perp listing, and they also give you token unlocks here. 117 million tokens were unlocked today, and that is the Wormhole unlock. Wormhole is the leading interoperability platform connecting traditional finance and the internet economy. They have the visual display that you can take a look at, but also when you click on the page here on their actual X post, it gives you all of the details of what went on. So today on the 3rd, the initial jobless claims came out. Coinbase International, BNB, L3, FAI perp listing, we just covered that. And then, of course, the token unlock. Now, tomorrow, the Fed Chair Powell speaks. U.S. unemployment rate comes out. U.S. non-farm payroll comes out. And then looking into the future, Rune Thorchain version 3.4.0 will be coming out. And the reason I really like this is because of the fact that it has a lot more crypto-centric information. It still covers the traditional news, like, for example, that we've been going over right here today. Just so you know, the unemployment claims did come out, and it was a beat, which is very fantastic. The forecast was for 225,000 unemployment claims. It came in as a huge beat, actually, at 219,000. Should have been very, very positive news for the market. However, the tariffs are obviously the thing that is running the full market right now. Also came out today, the forecast of 53 coming in as a loss at 50.8 is the ISM Services PMI. And if you want to find out more details about what these are, you can just click on the folder here. Once it's open, it tells you the information that came out. And this is the Institute for Supply Management, ISM, Purchasing Managers Index. A number above 50 indicates industry expansion, below indicates contraction. Source to change series from unadjusted to seasonality adjusted as of January 2001. Source change series calculation formula as of February 2008. So even though it did come above 50, it was supposed to come in at a much higher number. Now, coming out tomorrow is a massive, massive news days for financial news. Average hourly earnings number will come out, but this is the one right here, non-farm payroll employment change, and then the unemployment rate will be coming out. So we have the unemployment claims, which was a win. The unemployment rate will be coming out as well. But the most important thing that we're all watching tomorrow is there potential of an emergency interest rate lowering from the Federal Reserve. The Fed Chair Powell will be speaking tomorrow at 8:25 a.m. And speaking of financial news, you need to know about this as well. The 10-year Treasury yields have now fallen to 4% as the Dixie softens. Is it time to buy Bitcoin with this price dip? Will the U.S.-led trade war lead to a golden buying opportunity in Bitcoin price or further downside in the short term? On April 3rd, yields on long-term U.S. government debt fell to their lowest levels in 6 months as investors reacted to growing concerns over the global trade war and the weakening U.S. dollar. The yield on the 10-year Treasury note briefly touched 4%, down from 4.4% a week earlier, signaling strong demand from buyers. So what is happening right now is a lot of people, and you're seeing this, are exiting out of their risk-on assets, such as cryptos, such as individual stocks, such as indexes in the stocks, S&P 500, NASDAQ, and so on. And they're taking that cash and they're buying bonds because of the fact that these are going to bring in no matter what returns as opposed to losses from the risk on assets. So these are more risk off assets. Because so many people are flooding in and buying so many of them, the interest rate is actually dropping. The rewards for the purchase of the bonds is dropping. At first glance, the risk of economic recession may seem negative for Bitcoin. However, lower returns from fixed income investments encourage allocations to alternative assets, including cryptocurrencies. Over time, traders are likely to reduce exposure to bonds, particularly if inflation rises. As a result, the path to a Bitcoin all-time high in 2025 remains plausible. So what they're saying here is right now it's sitting at 4. It was 4.4. So you were collecting 4.4. So many people are buying these bonds now. You're only collecting 4. When it goes down to 3.5, now you're only collecting that. When it goes down to 3%, if it ever gets down to those levels, right? So 3.8, 3.6, continue on down. If it gets to those levels, then it's not even worth putting your money in to these bonds. Even if it's guaranteed returns, it's worth finding a potential hedge against this that is a riskier asset. And they're saying it could be the Bitcoin. Tariffs could create supply shock in the United States on regular goods and impact inflation and fixed income returns. One could argue that the recently announced U.S. import tariffs negatively impact corporate profitability, forcing some companies to deleverage and in turn reduce market liquidity. Ultimately, any measure that increases risk aversion tends to have a short-term negative effect on Bitcoin, particularly given its strong correlation with the S&P 500. And as we see here, Axel Merck pointing out, the U.S. is pricing in more rate cuts right now. You might say this isn't surprising, but keep in mind that the tariffs are a supply shock with less supply. If you boost demand with lower rates, you'll get inflation. So what that means is if we don't have products to buy, Remember, like COVID, right? There wasn't wood to buy to build houses. There wasn't electronic pieces to build computers, whatever the case may be. But at the same time, interest rates were really low because we were flooding the market with money. So supply and demand were unequal. There was a huge demand because supplies were not very much readily available, but there was also huge amounts of money in the market, making prices go up like crazy. So supply and demand got a little out of whack. And what they're saying here, we got the May, June, July, August, October, and December meetings that they'll be holding, and the potential of a rate cut, implied rate going down to 4.25. It's currently sitting at about 4.5, then going down to 4.01, then 3.92, 3.7, 3.6. So we're talking interest rates potentially coming down into 2026 back to 3%. Even if one does not view Bitcoin as a hedge against inflation, the appeal of fixed income investments diminishes significantly in such a scenario. Moreover, if just 5% of the world's $140 trillion bond market seeks higher returns elsewhere, it could translate to $7 trillion in potential inflows into stocks, commodities, real estate, gold, and Bitcoin. And, you know, it's funny we say 7 trillion like it's such a big deal. There are reports that over the last week, we've lost $2 trillion worth of money in the stock and crypto markets combined. And the other interesting part here is gold is becoming strong, getting into all-time highs, and the US dollar continues to weaken. So gold's surged to $21 trillion market cap as it made consecutive all-time highs, and it still has potential for significant price upside. Higher prices allow previously unprofitable mining operations to resume, and it encourages further investment in exploration, extraction, and refining. As production expands, the supply growth will naturally act as a limiting factor on gold's long-term bull run, which is interesting, right? Because there could potentially be an unlimited supply of gold if you find different gold deposits around the world, as opposed to with the digital gold or Bitcoin, we know that there's only 21 million. And that's what everyone talks about of why there's a potential more power behind Bitcoin as a reserve asset versus gold itself. Regardless of trends in the US interest rates, the US dollar has weakened against a basket of foreign currencies as measured by the Dixie index. On April 3rd, the index dropped to $102, which is the lowest level in 6 months. A decline in confidence in the US dollar, even in relative terms, could encourage other nations to explore alternative stores of value, including Bitcoin. And as we've seen, the United States now has the Bitcoin reserve. Other countries are starting to talk about having their own Bitcoin reserve. So if we're getting to a point where Bitcoin is a good leverage against all of these other options, and the price has dropped to an affordable rate for some of these other people that were buying at 108,000, now we're down at 83, 84,000. It's more affordable. We could see a huge surge into. This is me being optimistic, of course. Obviously, the markets are looking a little shaky right now, but all it takes is one little spark, and we start to see some bullish momentum, and we could have an absolute moonshot. And they go on, while no one expects to return to the gold standard or Bitcoin to become a major component of national reserves, I don't question that, though. I think that's definitely a possibility. Any movement away from dollars strengthens Bitcoin long-term upside potential and reinforces its position as an alternative asset. To put things into perspective, Japan, China, Hong Kong, Singapore collectively hold 2.63 trillion in US treasuries. If these regions choose to retaliate, bond yields could reverse their trend, increasing the cost of new debt issuance for the US government and further weaken the dollar. In such a scenario, investors would likely avoid adding exposure to stocks, ultimately favoring a scarce alternative like Bitcoin. Timing Bitcoin's market bottom is nearly impossible, but the fact that the $82,000 support level held despite worsening global economic uncertainty is an encouraging sign. And we also saw that in the total market cap of 2.6 trillion, instead of it dropping down below 2.5, it was holding at 2.6. We need to hold that as well. So they're talking about a support of Bitcoin at 82,000. We really need to hold the support for all of the crypto total market cap at 2.6 trillion and move up from there. Now, on a positive side of things, obviously we have the dollar crashing a little bit right now, but there will be no CBDC in the United States, hopefully. So no central bank digital currency for the U.S. Bill regulating stablecoins and a potential digital dollar moved out of the U.S. House Financial Services Committee after a late night vote. On April 2nd, lawmakers voted 27-22 in favor of passing the CBDC Anti-Surveillance State Act. The bill was one of the 5 committee considered in a markup hearing discussing possible amendments. Lawmakers also approved a bill regulating payment stablecoins, setting up the legislation for a full House vote. Many Republican lawmakers have warned institutions such as the Federal Reserve and the Treasury Department away from exploring CBDC development, often citing financial privacy concerns. After reintroducing the bill in March, Emmer suggested that it was an attempt to codify an executive order from President Trump. The order signed on January 23rd prohibiting the establishment, issuance, circulation, and use of a CBDC in the United States. And Trump's pick for the SEC chair makes it out of committee. U.S. lawmakers in the Senate Banking Committee voted to advance 4 of President Trump's picks for crucial government positions, including the SEC chair, Paul Atkins. On April 3rd, an executive session for the Banking Committee, lawmakers voted 13-11 for Atkins to serve 2 consecutive terms as the SEC commissioner, taking over for Gary Gensler's term ending June 2026 and another term ending 2031. Before calling the vote, committee chair Tim Scott said Atkins would bring much-needed clarity for digital assets. Ranking member Elizabeth Warren reiterated earlier concerns about Trump's picks helping billionaire scammers like former FTX CEO Sam Bankman-Fried and Tesla co-founder Elon Musk actively trying to destroy federal agencies. Like, dude, Elizabeth Warren is crazy, man. She has some wild conspiracy theories. The committee also advanced nominations for Jonathan Gould as comptroller of the currency, Luke Pettit as Assistant Secretary of Treasury, and Marcus Molinaro as Federal Transit Administrator. The majority of the Democrats on the committee were not present April 3rd, when Senator Warren acted as the proxy for many votes. But the news that really matters today is Coinbase Institutional has big news for XRP holders. Coinbase has filed with the CFTC to self-custody futures contracts for XRP. The exchange revealed that it would go live on April 21st, and Coinbase Institutional also indicated that future details regarding launch timelines and availability would be shared. Self-certification with the CFTC allows Coinbase derivatives to introduce XRP futures without requiring direct approval from the agency. Provided that the contract complies with regulatory guidelines, this process is commonly used by U.S. regulated exchanges when launching new futures products. The introduction of XRP futures on a regulated platform could offer institutional and retail investors an opportunity to trade the asset in a structured derivatives market. Futures contracts are often used for hedging and speculation, and their availability on Coinbase derivatives may contribute to increased trading volume and liquidity for XRP. So let's check in on our daily charts here. We are using our spider lines chart. These are our weekly spider lines, and these come from 2008, the drop of 2008. And we use the pivot point right here in April of 2021. And then that gives us a line into the future, which we use as support and resistance. And they've been pretty spot on, to say the least. So spider lines come from Crypto Face on YouTube. He does it for Bitcoin, and it does also work here for XRP. So as we can see, price dipped to this $1.90 level back on March 11th, made a nice rebound to the upside, bounced off the 250 level. Unfortunately, could not hold above. We were talking about a secondary candle going. We had a full body close above 250, and this is also a break above this support line from back in the end of December, beginning of January, pump to the upside. Well, that support line has now turned into a resistance. And in fact, it's been a pretty tough resistance. It happened once here. This was the announcement when Trump said that we're going with the XRP strategic reserve. Obviously didn't last. We had a fallout the next day, bounced off of it, tried to hold as a support, then we lost it. It resistanced us here on March 15th. There was also a resistance on March 19th and 20th, and then it was a resistance again on March 24th, and we have been falling ever since. We had this level here at $2.23 that was potentially going to be a support level. Unfortunately, we lost that. So now we may be returning back to this $1.90 level as a support. Now, there is one shining star in all of this. That is our 4-hour 1100 exponential moving average has held up strong. So as we talked about, it did bounce down here March 10th. That was that $1.90 dip. It hit right off that and the support line. But now it is just holding strong off of our 1100 exponential moving average. If we lose the 4-hour exponential moving average, the 1100 could be dropping to $1.87 if this $1.90. Typically what happens when something like this, where these two are converging, price could drop down, hold on this support level until this runs to the upside. However, I'm hoping and being optimistic that this was a potential bottom. It was a local bottom here back on March 10th, and we had the nice push to the upside. Unfortunately, we just continue on getting these lower highs, and we're not breaking out of that trend. When we go ahead and draw a ray as our trend line from this tip top spot right here on February 14th and draw through all of these touch points, we can actually see that it has turned into a nice support level in the past, bounced off there. And now we've got 1, 2, 3 down candles that bounced off of it. So yesterday's candle has now officially come to a close. Our short-term momentum wave is set to 0, so it can definitely have a big push. Last time we had this reset to 0, we already had a little bit of momentum built into it. That was March 13th, and that pushed us all the way up into this high, up into the $2.60 range on March 19th. However, our long-term momentum wave is still showing bearish. We are below the 0 line, and that's not looking strong for us at all. It needs to turn up. Last time it got to 0, it actually rejected off of it right there. It also had a hidden bearish divergence the next day after it bounced off of this $2.50 resistance. So right now, short term, we got a support at $1.90. We also have a resistance coming in at $2.23. We'll continue to watch this over the next few days.
April 15th, 2025. This is a huge date because it's the deadline for 2 high-paying tax credits that you probably haven't heard about, but you can still get if you take action right now. We've partnered with the relief consultants who are experts in the tax code who've recovered over $100 million for their clients so far. So if you're a business owner or an entrepreneur, listen up so we can get you help and reach our goal of recovering $10 million for the Bull Runners community before the April 15th deadline. So here's how it works. If you're a business owner who had employees in 2021, then you qualify for an average $150,000 check from the Treasury and possibly more with the Employee Retention Credit Program. So if you were told in the past that you don't qualify, get a second opinion now through the link in the description below this video, because there are rules and regulations that have changed just recently. So there's a high likelihood that you do qualify now. And if you sold your business or you shut it down, you still qualify as long as you were active in 2021. So don't miss out. Schedule an appointment with the link below. Just click business owner with employees if it applies to you. There's also a second tax credit that also ends April 15th. So this is for the bull runners who are self-employed in 2021. So if you were a 1099, not W-2, and self-employment was your primary income, the Treasury check for this tax credit can go up to $32,220 with an average of $17,000. So if you were self-employed in 2021 and want to see if you haven't claimed this credit, which nobody has from our community thus far for some strange reason. We've been talking about this in several videos. I don't know, man. Maybe you just want the Treasury to keep your money. But if you want to get money back in your pocket, then schedule a consultation. Don't be lazy. Do this right now before April 15th through the link below. Just click self-employed if you think you qualify for both credits. Let the rep know on the call. And by the way, if you have your tax returns from 2020 and 2021 for this credit, it will be a faster turnaround for you. So have them ready on your call, and they can literally tell you if you qualify on your first call to get you paid. So if you need more money back in your pocket for this bull run, take action right now, click the link, and let's get you paid.